Business Security Weekly is live streamed and recorded on Mondays at 2 p.m. Eastern Time. Each week, we address the challenges facing CISOs through our guest interviews, including former and active CISOs. Our news segment is focused on leadership and communication to better help security leaders translate and communicate security risks into business risks. Jason Albuquerque, Ben Carr, Tyler Robinson, and others add their expertise to the conversation. I'm Matt Alderman, and I hope you search for Business Security Weekly in your favorite podcast catcher and subscribe to download our latest content.
Welcome back to Enterprise Security Weekly. Follow us on LinkedIn for updates across our organization, show highlights, and more. You can find us by searching for Security Weekly Productions. And now for the Enterprise Security Weekly news. You can follow along with the news if you go to securityweekly.com/ESW337. You can see all the items we're potentially going to talk about today. There's 26 of them, so we might not get through all of them. But the first one here is our first unicorn in a long time. Island raises $100 million in Series C funding, which gives them a valuation of $1.5 billion. Look at that. Look at that dabbing unicorn.
I love it. I love it.
That's how long it's been since we've had a cybersecurity unicorn. We had to bring back dabbing to go back and find that image.
That is, yeah. It's been a while. That unicorn's got a lot of gray hair.
Yeah. So yeah, I was kind of surprised to see this. They raised, both Island and Talon raised a ton of capital, and we were just talking about enterprise browsers in our first segment today. Though I don't really see Island or Talon competing with Google Enterprise. I mean, I almost see them as additive to this, and I still highly believe that, like the previous enterprise browser market, this is going to be, they're going to end up being a niche. Yeah, it's something you buy just for your contractors.
It's so tough to know. In this market downturn, in a situation where it's impossible for mid-level or worse startups to raise money. Like I know one startup I'm involved with is absolutely killing it. Would have easily raised at a 250 to 300 million valuation 2 years ago, and is struggling to raise on 40 million of valuation today. And this company's killing it. They're doing very, very well, growing in a very healthy way. I can't see a situation where $100 million goes into a company like Island where they can't support it, where it's not already growing. So this just is mind-boggling. My mind is exploding in this situation because a market I thought didn't deserve to be there, in a situation where I've seen this playbook play out 3-4 times and it never gets to a touchdown. It always ends up being a punt. I'm just blown away. Good for them. And this is one of those situations when it came out, I immediately sent a message to Adrian, was like, WTF, dude, how does this even happen? Like, let's debate this on the show, because I just am not sure how a company in a market that has been attempted and failed multiple times over the last 10, 15 years that we've been tracking this market gets $100 million in this raising world without actually having something massive underneath the hood. They've got to have something. There has to be something there.
Yeah. I mean, I see it as a product that's a nice to have, not a must have. And if it's a must have, I still see it only being a must have for certain scenarios, like contractors for, like Fortune 100, which is, what they're talking about here. Multiple customers ranking in the top 20 of the Fortune 100. So, sure. Have they found market fit? Sure. Is that market worth what it's being valued at? I'm not so sure. I mean, A16Z was talking up Bromium left and right. You had Mark Andreessen talking about it being the, the highlight of the industry and fixing all this stuff, and they were pretty upside down on that sale to HPE. I think they raised $115 million, and I think got acquired for 40, somewhere around that.
Let me ask you a follow-up question. What do you think of Okay, so the market might be the enterprise buyer, the enterprise browser that exists within, say, highly regulated financial services, stock trading, et cetera, where all comms have to be monitored, et cetera. Sure, use cases like that, highly regulated use cases. What do you think about the storyline of enterprise CISOs, general enterprise CISOs saying, I want to secure all traffic to Chat GPT? Does that play into this equation where it's, hey, how do I stop my data being typed into ChatGPT or OpenAPI as they ask complex questions and have it captured by ChatGPT? One way to do that is to put it in the browser and limit access to ChatGPT or filter data. Like, you're now in the browser and you can exist in there and do essentially a browser-based DLP. Could that be a driving factor to the adoption? Or am I grasping at straws?
I think well, so I think some people might be thinking that, but we know what happens when you block users from doing things that increase productivity. They just find a way around it, so they're gonna, I mean, any place you install the Island or the Talon browser, they have to solve the problem of the other browsers that live on there. Like, what's going to stop? And I'm sure they've got some answer for that. Maybe
they got to have an EDR. They got to have an EDR on device too that'll stop the installation of competing browsers.
Well, I mean, you can't uninstall some of those native browsers, right? I'm not sure if you can fully uninstall them, but maybe you can block people from using them. But then, somebody pulls out their iPad or their iPhone, and they've got, that feature turned on where, they've got the ChatGPT app on their phone, or they just open it in the browser in their phone and just copy and paste the answer to their ChatGPT question. Because like on Apple, you can share your clipboard between your mobile devices and your Mac, right? So you can just copy it to the clipboard in your phone, paste it right into whatever your Google Doc on your laptop. I mean, just like attackers, users will find ways around things that block productivity. So I think more likely, I think we have to find ways for users to use things like ChatGPT securely, or we have to give them alternatives because the impact is just too big on business productivity there.
Yeah. And so just to provide,
I don't think an enterprise browser is gonna do that. You're gonna be looking at other products there, I think.
So just to provide color to the black and white photo that we're all looking at right here, that 100 million raise brings it to 385 total invested in this company since Feb 1 of 2022, and does not include their seed round, which is not listed with an amount on Crunchbase. So 100 million A, 115 B, a couple of strategics totaling 70, and then another 100 million C in 18 months. In 18 months. Is there massive growth there, or should we be like, hey, you're selling a bill of goods here, guys?
We don't know churn until year 2, year 3. Like product hasn't even existed long enough to see if customers are actually getting value out of it. If we go back to FireEye, FireEye was the hottest thing ever for a while there, and it took kind of like 3-4 years in before you started to see massive customer churn go to their competitors who found a different go-to-market with a different licensing scheme. And then that kind of, I don't know how much money spent on malware analysis sandboxes that grab stuff on the network anymore. Like it seems like that's probably not a big market anymore.
And Tyler's probably not going to like me very much for saying this, but investments don't necessarily mean that the investor believes in the company and the product. They believe that they're going to get a good return on their investment, and that is a very different calculation.
For sure. Very, very astute of you, KT.
And investments are not tied to product efficacy. Yeah.
Yeah, but listen, man, when you're putting 100 million in, there's no magical I don't know if y'all are TikTok people, but there's no girl math, boy math, or in this case, investor math that you can really do in this situation when you're taking in $100 million that doesn't necessitate a company being successful. Like 100 million is.
But success is very different than either Longevity?
Not anymore, Katie. Not anymore. Now they're much more tightly correlated. Today, investments like that are much more tightly correlated. A year ago, totally get it. Agree with you 100%, right? I know of a company, I won't say the name, that was at about 6 million in ARR when they raised 100 million. They were at 6 million in ARR and raised 100 million. Now, if you're at 6 million in ARR, you are raising, your valuation is like maybe 40. Like you're not raising 100 million. So it's just a different time.
That's true. There is a market correction that has gone on that doesn't mean some people aren't using the old playbook. I don't know anything about this company. Let's just
I'll tell you what, if my GPs are using an old playbook like that, I'm pulling my money out of that fund tomorrow.
Oh, for sure. But do you think that means it's not happening?
I like to think that most investors aren't that dumb, but who knows? I've been shocked before.
Yeah, I mean, that's why I'm going back and using examples here. But we've seen, we didn't think, FireEye bought Mandiant. They brought on Dave DeWalt. Like we didn't think they could fail. Like that was some hot stuff. And then I think they sold for 2.2x, something like that.
No, that's mind-boggling to me. And it's funny, I did not remember those data points. Adrian, for the audience, Adrian and I immediately, as soon as this announcement came out, we started slacking each other, trying to be like, whoa, what's going on here? And he brought up that FireEye data point, and I did not realize they only sold for 2.2x invested capital. That is amazing to me. Or they IPO'd for 2.2x, I should say, not sold.
No, they were acquired. SPG, the private equity firm that picked them up, sold them off for 2.2x after splitting out the Mandiant portion, which of course we know the Mandiant story. Mandiant was the real piece of FireEye that was worth some money and went to Google for, I forget what the number was, like 8x, 10x, 11x. I think it was 11. It was a lot more than 2.2. But and then the remainders of FireEye went into Trellix. And
okay.
Because SPG also acquired both RSA and McAfee and broke up and split all of that stuff out, which is why Archer's now an independent company. The RSA conference is now an independent company. SPG has just been parsing out all the old stuff.
Math, investor math.
Yeah, and FireEye had negative 3% growth at the time that they combined it with McAfee Enterprise to make Trellix.
But they're doing okay now, publicly traded company. If they're not growing a little bit, they'd be in the dumper. But I mean, they're not massive, but they're doing okay.
Who? Which
FireEye,
one?
Right?
Trellix?
Oh. Am I? Is there no FEYE?
The remainder of FireEye is.
I'm just dumb.
So what used to be FireEye?
There are no dumb investors, right, Tyler?
Just one, Katie.
I think the only thing that still has the McAfee name is the consumer side.
Oh no, I get emails from McAfee all the time. They're totally valid.
Katie, I used to like you. I don't anymore.
Just all the enterprise McAfee stuff was rebranded as Trellix a couple of years ago.
Yeah, there is no FEYE anymore. So just goes to show you the last time I thought about buying any FEYE stock. So
yeah, SPG took them private.
Wow, just goes to show you.
So yeah, it's I mean, to sum up, I think it's just too early. I mean, any company that raises $400 million in 18 months. I don't know.
That's a lot of money in a short time.
All right. Here's the bet, Adrian. I'm gonna bet a bottle of bourbon with you, a decent bottle, nothing crazy, a decent bottle.
Okay, yeah, you have to specify. You can't just say
under $100. Under $100.
It's a wide range.
Yeah, under $100. A bottle of bourbon that they sell for 3x invested capital, which puts them at a unicorn status.
3x invested capital?
Yeah,
well, that's what they're valued at right now. Yeah. You think they're going to sell at what they're valued right now?
Well, that's the over-under I'm setting for you. Would you take the under or no?
No, I'll take the under.
Okay, there you go. All right, lock it up. Everybody heard it. This has been publicly stated. I got them at 3 times 385 million. Or up.
Yeah, I don't think they break $1 billion.
Woo! This sounds fun. I think it's there. I think the market's there. I don't think these investors. Listen, I don't think Prism Capital. I don't even know who they are.
I think if they sell now or very soon, you'll win this bet. I think if they hold out, they're going to lose it.
All right, you heard it here first, folks. So when Island sells, we get to rub it in somebody's nose.
It wouldn't be fun otherwise.
Exactly.
I like a good bet. All right. Other unlikely funding. Censys secures $75 million. Started off as, if I recall correctly, a college project. I want to say this was, or maybe it was the other one that Rapid7 was working on, was part of University of Michigan. But I'm pretty sure Censys started off as some kind of university project and then turned into a commercial business. And it's not a huge Series C, but $75 million is a pretty good raise in this market.
Yeah, that's a fairly serious raise for a market that should have been absorbed into something else, right? So Censys plays in the EASM, ASM space.
Most of this market's exited already. The external attack surface management space, yeah.
That's right.
Well,
this is a bag holding problem,
now.
Right? So go ahead, Katie.
They're pivoting now from external attack surface management into exposure management. That is the next, quote, big thing, unquote. Yes, if you can't see Tyler's face, if you're just listening, he's giving a really, snarky, sarcastic, as he should be, because this is chasing a new term. It's chasing a new term that has been created in an effort to create a market which vendors are going to go to, because once again, there are going to be some companies, not a lot, but who are going to profit big if they move quickly and first, because the analysts are going to hype them up. The market's going to be all excited about it, and exposure management is, quote, the next big thing, unquote, after, the threat hunting, the XDR market, because it adds in so-called prioritization schema to allow companies to react or act more proactively than before. So this is where that's coming into play, that sort of market buzz that is founded on hopes and dreams. I'm not saying Censys has bad technology. That's not what I'm saying at all. But I'm saying it has pivoted from a market that is slowly dying a painful death, into something that has a new name that makes it sound exciting, versus necessarily innovating on something that's different.
This is exactly what we were talking about with Chad earlier. This is trying to confuse the market. Innovation in buzzwords is what we're seeing here. I'm looking at the website, and they've got a little diagram here. It's exactly the same thing Psycognito and everybody else is doing in the external attack surface management space. So Gartner's going to continue filing them under EASM, and they can use whatever name they want, but they're not doing anything different than their competitors using the old
Forrester name. Is pushing exposure management.
Okay, well, so two different names for the same thing.
Exactly. But exposure management is the, quote, next best thing.
But what's their exit? IBM's acquired here. Microsoft's acquired. Palo Alto Networks is acquired. Rapid7 is acquired. Tenable is acquired. 3 or 4 insurance companies have acquired in this market.
Potato. They'll get picked up. Somebody will buy them. The question is, how big? Just a point of reference, 130% ARR growth, fantastic number, but it's not over 12 months. That's over the last 18 months, because that was since the last funding round. So 130% over the last year and a half. That's good, right? It's not your 3x, 2x, or 3x approach you typically want as a early to mid-stage investor. But in today's market,
starting point,
hey, that makes sense.
Over or under $1 million, though?
What's that, bud?
Was the starting point for that growth more or less than $1 million, though?
Well over $1 million. Well over $1 million. Absolutely.
Yeah, it got to be to raise a Series B of this size, right?
Well over $1 million. Yeah, they're at $10 million or more in revenue. I would bet money on that.
Yeah, I don't think they would have landed. Yeah, they wouldn't land this other way, right?
My bigger question here isn't the investment. I think the investment's kind of okay, right? The number's fine. It's going to buy them another 3+ years of runway. They'll take a run at the market. They're going to hope the market returns underneath them. And the reality here is, if it does return underneath them, this investment round, the Series C round led by Decibel Partners, was probably done at a valuation that is very, very reasonable. And if that's the case, the idea here is that, hey, if we can get 3 more years out of this, simply the market turning around underneath them could give them enough growth in the investment to make it worthwhile.
Yeah, led by Decibel, but that was for $50 million of it. The other $25 million came from Silicon Valley Bank.
The artist formerly known as?
No, both SVB Capital and Silicon Valley Bank, a division of First Citizens Bank.
Interesting. So it's probably done as a venture debt component to the actual equity investment. It's a combo platter. Just guessing there.
I think that's the first time I've seen SVB's name attached to any kind of fundraising in a very long time.
Yeah, it is debt financing. It says October 24th, $25 million debt, $50 million of equity. That's exactly right. And not only though, the other thing I'll tell you is, look, this is a C round, and it's a party round. Decibel, Google Ventures, Greylock, and Intel split the $50 million. None of these guys are going all in on this company.
Yeah. Yeah, I mean, Censys. So I did a lot of research into this market testing in this market, and honestly, in 2021, I didn't include them in my testing because they just weren't far enough along to be included in the test with their external attack surface management product. So this product's less than 2 years old at this point. That they're raising money on. They pivoted away from just internet scanning, right? Like the old product, the old Shodan product was just, I scan the whole internet and you pay me a very small, subscription fee. It was almost a consumer product to be able to query my database of the internet. So, in their favor, Microsoft acquired RiskIQ also less than 2 years after they pivoted into this market as well. So, you can get an exit, after very brief pivot. So.
You can, as long as all the girls aren't already dancing with somebody else. That's the hard part, right? When you're the last one standing on the wall at the dance.
Got to find a partner. I mean, the thing that works in their favor is anybody and everybody can get some value out of external attack surface management. Like I mentioned before, Palo Alto's got one, Microsoft's got one, IBM's got one, insurance companies are buying them. So, I mean, it's in vogue to kind of use this external scanning, for company reputation, as a way to measure a company. It's wrong to do so, but that's what BitSight and Security Scorecard have been doing for a long time now. But that increases their chances of an exit. They got more options.
And I think we're what, 30+ minutes into this conversation, and we've gone through 2 of 20-something articles?
Yes.
We're killing it today, buddy.
Any more of the funding that you guys want to discuss? Because that was really pretty much it for me. I didn't get a chance to really dive into many of these other ones. Didn't you mention Harmonic earlier?
I did not, no.
What was the H startup that you mentioned there? Harness. Okay.
Yeah, and they're a massive company now. They're doing really well, growing like crazy. Now, Harmonic is doing secure generative AI deployments. Deep fake detection platform, Reality Defender. I like that name. I don't know. Maybe I'm a little cheesy on that one, but I like that name, Reality Defender. Secures $15 million in Series A. I kind of, deep fake detection, that's kind of a cool concept. Worth $15 million? I don't know, but still kind of a neat idea.
Yeah, it's going to be interesting interesting to see what kind of legs these companies that are. So you're talking about companies that are all in on AI, being a bit of a risk, or Chad was. Both of you guys were talking about that.
Them, yeah.
These are companies that are all in on the companies that are all in, right? They're chasing. Yeah,
I've followed that market pretty close, and there's no way I'd put money to work in a pure play AI security company. Now, if it's a company that's using AI to analyze data in a way that provides a value proposition that has real value to a customer, I'm in. I don't think we're ready for, it's like buying, it's like investing in a company that does insurance for flying cars today. Really? Don't you think you might be a little bit early, right? So it's a similar kind of vibe for me when it comes to traditional pure AI sec.
Yeah. And honestly, if you actually look at the news today, we don't have a whole lot to talk about. Basically, there's a big chunk of funding. A couple of just sort of interesting things like the hacks here are kind of fun stuff to talk about. Then there's the big Okta breach that happened less than a week ago.
That one's massive.
And we got a few essays here and then some squirrel stories. So we're actually doing pretty good.
I think we're done seeing the end of the Okta breach. I think that Okta breach is one of dozens of. So for those that don't know, and I'm going to TLDR it because I'm not an expert in it. So Adrian, if you've deep read it, please feel free to correct me. But my understanding is Okta got breached, and in the process, some of their support desk processes got breached, allowing the attackers to grab, I forget what they're called, HAR packages, which contain the primary keys to some of their customers' Okta deployments, allowing for complete compromise of that customer. So the question is, how many of these HAR, if they're called the HAR, whatever they are, packages were compromised? And it could be on the order of a dozen or dozens, in which case you'll see a cascading effect of these compromises going through more and more target companies over time.
So yeah, I spent all day looking, a good chunk of yesterday reading up on this. And so an HAR file is just a web session. So if you're trying to troubleshoot an issue with a website, you can F11 pop open the web developer tools, which is illegal in Missouri, as we all know. According to some politicians in Missouri. And you can go to the network tab and you can record your session. You can hit record. You can log into a website. It's going to save all that. And if you're trying to troubleshoot something with a SaaS vendor or identity vendor like Okta, their support people are probably going to have you go through this process, save the HAR file. The HAR file is going to have everything from that session in it, including any OAuth keys generated, all the back and forth that occurred in that while you were recording. And it's just a single file. It's a text file you can just open in a text editor. So it's really easy to scrub, which if you look at Okta's instructions, they do warn you to sanitize your HAR file before handing it off to their support people. But I suspect nobody ever does this because it's not easy to do by hand. You have to know what you're looking. You have to know what an OAuth key looks like in this context. But number 13 is a 6-year-old handy little tool that can automatically do some of that work for you called HAR Sanitizer. And that's why I included that here. So this is something that Okta could have automated on their side to protect their customers for a scenario like somebody hacking into their support website. And so that's what happened is they hacked into their support portal where all the customers' recorded sessions had been uploaded. And we don't know from Okta how long the attackers were in there. Most of what we know are from 3 high-profile security vendors that got hacked through this, through their access to the support portal and these HAR files. And that was Cloudflare, 1Password, and BeyondTrust. And from the really helpful details that they've given us, absolutely, we can suspect there are way, way, way more Okta customers impacted than this. But it's interesting that the 3 we know about are all pretty big. These are not startups, pretty big security companies.
The trickle down here is going to be a big, big, big problem because we don't know the N. We don't know the number of HARs that were compromised. And this just could result in company after company after company just getting absolutely wrecked. And from an impact on stock market kind of scenario, I don't know if you guys noticed when this was announced, there was an actual 11% decline in the stock, in the Okta stock on that day. And it's been kind of fluttering around that 11% dump. It's the first time in a while I've seen a breach actually result in a material impact to stock. And I wonder if
12% impact Okta alone, right?
Yeah, I'm wondering if the market's smart enough to understand how important this hack has the potential to be. We don't really know. I've even had investor friends reach out to me saying, "Hey, should I short it? Like, what's going on? Give me a TLDR on what this means." And the end of the day, the difficulty of this scenario is we just don't know how broad the impact could be over time.
Right. We need those details from Okta, and they're not sharing them.
If this is dozens, a dozen, 2 dozen, think about that. Think about the erosion of trust that will happen to Okta as a identity provider. Like when an identity provider gets hacked, that is so massively different than when a general company gets hacked, because the identity provider has to have the trust of every single one of its customers to operate.
And it's like the third significant incident they've had in 2 years too. This isn't the first time their name has come up. They can point to one of the early ones being a contractor that they outsourced support to, but does it really matter? Like if the customer's negatively impacted, like it's their responsibility. Doesn't really matter.
They're a target. They're a target for a reason. They're a target because they're a central cog in the security of many other companies. And so you get a voice multiplication. You get a multiplier attack. You take one down, you compromise dozens. And that's kind of like back in the day when I was more offensively focused, I always looked for situations where I could compromise one thing that would lead to the downfall of dozens of other things, right? And even if it's, one target within a company that would lead to other targets within that same company, this is just on a bigger, broader scale. So as an attacker, this is nirvana.
So they should have been able to invalidate all the OAuth keys in those HAR files. That's what the very first thing I would have done if I were Okta. But at a bare minimum, so 1Password, they saw their first attack on September 29th, and then Cloudflare saw their first attack on October 18th. So that's a big time period for the attackers to go in, hit a whole bunch of companies, make a whole bunch of mess. So we could continue to see fallout from this, even though it should be handled at this point, at least from Okta's point of view. But we don't know what happened. How many days is that? That's nearly 3 weeks. Yeah, over 3 weeks.
It's scurry.
Yep.
We saw the solar winds thing a few years ago. Everybody said, watch out, watch out, watch out. And companies they said, oh yeah, initially, and then complacency set in. But this is definitely, if you're an attacker, this is the way to go, right? Because, you find one big target, it may take a little bit longer. In this case, it doesn't sound like it was super complicated, but exact same thing with SolarWinds. We saw the fallout for months and months and months and months, and we probably won't ever know the extent, really.
Yeah, and it did take. We were still hearing news stories about fallout from SolarWinds months later, right? And we're not even at a week yet, so I would expect to hear more. The bright light I see here is in the reports that we've got from Beyond Trust, Cloudflare, and 1Password. Like they've kind of validated a lot of different things. Like zero trust principles, saved their butts here. They were actually able to detect these attacks within minutes of their happening in some of these cases here. So certainly, and that's why they're talking about it publicly, right? Like they did a good job. They have a good story to tell.
Right. If all of their data was just splat, this would be a very different lessons learned.
They would have a post as short as Okta's, right? Like not these long, like here's all the details, here's the timeline. But still, it's good to see some vendors saying, look, we did the work, we stopped the attack, we detected the attack. This is how security is supposed to work, because this is not a test of their products in any of these cases. This is a test of their corporate IT security. That's where each of these security companies got hit. And same with Okta. Okta's product wasn't hacked. They went after the low-hanging fruit, which was the support infrastructure, which is where a lot of companies are like, we'll just hire some contractors, we'll throw up a Confluence server or something like that, and that's how we'll manage support. Not thinking about all the customer secrets going in there. But yeah, literally, they were storing plain text secrets in this site, not protecting those plain text secrets of customers. That's how you have to think of it when you're designing security. We just invited all our customers to upload their plain text passwords and OAuth keys. When you think about it like that, you're like, how could we have let this happen? But that's typically not how you think about it. If you're not walking through the support people process, like I'm sure somebody somewhere was assuming, everybody's sanitizing their HAR files before they upload them. Surely. But if you talk to somebody in support, they'd be like, yeah, no, that never happens, dude.
Well done.
Nobody does that.
Well done.
All right. What else we got here? Katie, anything in the news today that you want to touch on before we wrap?
Anything in particular?
You can talk about your latest. I didn't catch your latest newsletter, so I don't know what it was about.
What was mine? Oh, yeah. It was just about. Again, this is gonna poke at Tyler a little bit.
Oh, really?
Why am I the easy target? Come on now.
It was part one of why starting a cybersecurity business for a big payout is a big mistake. Actually, I don't think Tyler would necessarily disagree with what I wrote. But yeah, it's all about, cybersecurity is a good field to get into. You can just look at this list, right? 3 months ago, 6 months ago, we did not have 12 funding stories, right? We had 2 or 3 because it was like a desert out there. And now we're seeing, even though the market has not rebounded quite yet, we're seeing funding for cybersecurity companies because it's like moths to a flame. And the last interview talked about that too, right? Like there's so much money going into companies doing very, very similar, if not exactly the same things, and it's very tempting for somebody with an idea to enter the market because they're going to get funding, and the hope is that they're going to become the next unicorn and exit. And wow, is that a massive mistake?
But if enough moths dive at the flame all at once, they won't all get burned. Some of them will come out unscathed.
That's what everybody's hoping on. And so this two-part series talks about why it's a really, really bad idea. The second part comes out, I think, next week, and it talks about, and it's a very, very abbreviated list of all the crap you got to think about if you want to take a company public or get acquired. And it's like, I mean, like I said, very, very, very abbreviated list, and even that is like, whoa, no thanks, not for me. I'm going to sell ice cream.
It is interesting because the whole investment model is designed for large amounts of failure, right? Because you're going to get some big returns, but we don't typically see that in security. So it will be interesting going forward if security begins to resemble a more traditional market in terms of failure.
So I'm going to press back on you a little bit there. We do see that. The only problem is you don't actually hear the names of many of the failures. So what I mean by that is
there's no big press announcement when a company closes for the most part.
Right.
But anytime there's a huge success, the founders are lauded. They're, rolled out at conferences, and everybody's like, ooh. And I'm not saying there's anything wrong with wanting and I say this in the second part, there's nothing wrong with wanting to make a lot of money and be financially secure and take care of the people you love. Nothing. It's just a ginormous risk, and if you're willing to risk your house, your financial future, that of your children, et cetera, go for it. But don't expect a 7+ figure return on it. That's the wrong way to be thinking about it, in my opinion.
Yeah, it's interesting, right? The majority of cyber startups fail. The only difference is you don't hear about them because they fail before you've heard about them, before they get big enough, before they get broad enough. And I know this because I see deal flow, and I've been watching deal flow for 10 years. And I see all these names go by. I see the pitch after pitch after pitch, and then never hear from them again. Right? These things all die early, die on the vine, maybe get a seed round and then die on the vine. You only hear about the successful ones. And even the mid-level successful ones are successful exits for the founders, right? They're going to be 7-figure exits for the founders. But the majority of them do die on the vine, whether you think that's the case or not. When you start to really look into the quantity, for every 10,000 products or 3,000 companies that are in market, there's probably 10x that give it a go. And that's exaggerating, but you get the point.
What are you calling dying?
Adrian helped me a while back. We were talking about, I'll be as big as I can, a particular company that advertised its acquisition as this massive success. And it was private, so no numbers were published.
And it wasn't.
And Adrian helped me find the data on this company, and it was an acqui-hire.
Yep.
And so it was publicized as being super duper success. But when you broke it down, it was like, okay, like you said, the founders probably got $1 million or $2 million each. And then the rank and file, of which there weren't many, got, I don't know, 10, 15K.
Yeah.
Mm-hmm.
No, they didn't get a 7-figure payout in a lot of those. They got hired. They got to keep a job.
They got to stay employed. That's right.
Their paychecks continued. That was it in a lot of these cases. So do you include that when you say dying on the vine, like those bad exits? Are you including those in that?
I think I'm being
literally
generalizing.
Close the bank account, lay off the employees, send the last checks out.
No, I think I'm generalizing, good versus bad exits. And I think what Katie's bringing up is, when you go into a startup, I think a lot of the individual contributors or even managers up through the E staff to a degree think they're going to have some kind of big potential for big exits. And you got to understand the power law curve of VC. That's not there. Most people don't get it, period, full stop. If you get it, consider yourself super lucky that you timed it right. You did everything that needed to be done, and you timed it right against market dynamics and significant quantity of things that are well outside of anybody's control within the business. And so chalk it up to what it is. It's a big portion luck and a big portion preparedness and working hard, right? But the problem that I have with a lot of this is, and I think this is what Katie's getting to, is the outsized returns for the investors. The investors make all the money, all of it. The vast majority of it. The second biggest exiters are the founders, 2 people, generally 1 to 3 people. And then everybody else makes negligible money, right? The executive staff may make some good cash. Everybody below that makes nada, right? And that's the truth for most startups that don't hit the massive unicorn, high growth, insane exit multiple. And that's the reality is that's going to be 90+% of them.
Yeah. I think
go ahead.
I think the opportunity for a duo, is maybe once every 5 years. And I mean, we're looking at 11 fundings this week alone.
Yeah.
Just know what you're getting into, I think, is the moral of the story.
Yeah, it's too much work, it's too much risk, it's too much pressure, and people don't think about it. And you can talk to people who have worked in cybersecurity startups who are the rank and file, and some people go, oh, okay, I got a $10, $15, $25, $30,000 payout. First of all, that's not life-changing money for most people who are gainfully employed in this industry. And second of all, oh, by the way, it's a startup, so you didn't even get a 401k. So that's not like just it's.
Well,
what did you call that?
Add a little
basic
bit of fuel
math,
to
the
that
TikTok
fire,
math, whatever.
Let's say that you make it a $200,000 or $250,000. Let's say you cash $250,000 on this. It took you 6 years to do it. Amortize it. That's a bonus. That's an annual bonus in today's economy, right? That's not even a massive exit, even at 250,000. And so it's just the economics of the situation are very, very difficult for most employees. And I think you bring up an excellent point that most people don't know what they're getting into. Most people think, startups, I'm going to kill it. This could be amazing. Yay. It's not generally how it works.
Right. Well, that was a super duper rabbit hole.
It was. And who knows if the team gets to the rabbit hole graphic fast enough, but if they do, that's awesome. If they do, there it is. I knew they would. As soon as I said that, I'm like, that graphic's coming up in a heartbeat. These guys are on point. But yeah, but you're not wrong, Katie. Totally right.
One thing I did like before we get to Squirrel Story was the HDMI adapter. It's scary, but kind of funny at the same time.
I mean, it doesn't really run code like it. It's kind of like an NFC tag, like the limit of what you can do with that. Like you can make a URL open on a device, is what it sounds like. And then if you continue trusting it from there, like you're on your own, but still kind of funny.
It's just kind of ridiculous. It made me laugh while I was reading it, so that was a good one.
Yeah, and let's see. So we got time for our 2 squirrel stories here. I mean, there's not a whole lot to talk about with either of them. It's mostly nerd humor. Number 25, how to exit Nano. The joke there is that Nano is not difficult to exit like VI. But they're acting as if it is. So it's just some nerd humor there.
Adrian, stop right there. I'm a VI guy. If I can exit VI, literally anybody can exit VI.
And WQ bang.
That's right.
Yeah, it's not that hard to remember, but I think that's the joke, right? How to exit Nano is that, okay, if it's hard to exit VI, then why not Nano? And then I think I follow the person on LinkedIn that the second squirrel story is about, because I've seen so many of these visualizations of the CISA. So where you see Kev is the known exploited vulnerabilities list that CISA's been making. These are vulnerabilities that they've actually seen maliciously used by attackers in the wild. So really useful list, because there's 200,000 vulnerabilities out there. So, having a list of less than 1,000 really helps you prioritize your patching and your fixing vulnerabilities. But yeah, people have been going nuts with throwing these into all sorts of different visualizations and that aren't like, they're impressive to look at, but you can't really do anything with them. Like, oh, look, Microsoft is the biggest one. Big shocker.
I do like the pretty force-directed fireworks vulnerability graph. That's good. If it came with little pew-pew sounds, that would be awesome.
Pew-pew. These are great graphs. Like the last graph there, what is this called? The chord diagram. It's called a chord diagram. Looks amazing. Like, I don't want to try and glean any insights from it. I get a headache before I get any insights out of it.
Completely useless, but really cool looking.
I would love to have it hanging as art, though.
Completely cool.
I mean, I do really like this fireworks diagram. Maybe I'll print it out, put it on my wall. I can totally, just like this guy, make up what it means. It's great.
Yeah, they do have value, maybe. Artwork. Yep.
And although this was written tongue-in-cheek, obviously, it's a quick, fun read. It is kind of a commentary on our market.
Shout out to my cybersecurity data science friends. We see you.
it is kind of a, well, guys, here's what we're doing, and people will 100% think you're super smart if you have these pretty visualizations and say some pithy but generic things.
And I have no idea who authored this, so as far as I can tell, they're anonymous. But maybe it is somebody I know in the data science world that authored this. I can think of a few people that have this sense of humor.
It's pretty good. I like it. Tyler is ready to go, or he's drunk, or both.
Nah. No comeback to that, Tyler? What are you petting? Are you petting one of the squirrels?
He's petting the squirrel. He's also muted.
Yeah, I'm talking into mute. I'm petting the squirrel. He's a good squirrel.
Yeah. Apologies to anyone listening to the audio format of this. We have squirrels on screen that we can interact with. So. All right. Thanks so much, guys, for joining me today. This has been a lot of fun. This episode is a lot of fun. Got double the amount of Tyler today, so I'm happy about that. And Katie, I appreciate you being with me all day today. I enjoyed all our interviews and conversations.
Pleasure as always, Adrian.
All right, Katie, I'm gonna miss the pumpkin stuff.
You will. I will report back. I'll take pictures and taunt you with it.
Take pictures. Yeah, at least I can look at it and drool from afar.
I can also send you the recipes and you can make them.
That works too. I will take you up on that. All right, a big thanks to everyone for watching or listening to this week's episode of Enterprise Security Weekly. We will be back next week.